When is in half a day, I'm Praislyn. Today I'm going to talk to you about taxes, but more specifically, income taxes. So, what exactly are they? The income tax is a tax that governments impose on financial income generated by all entities within their jurisdiction. By law, businesses and individuals must file an income tax return every year to determine whether they owe any taxes or are eligible for a tax refund.
So in other words, it's the money the government takes from a portion of your income wherever or whenever you work that goes towards the government's general fund.
Who are you? Anyways, now that she's gone, and I have no idea who she is by the way, let's use Joe as an example to help us better understand income taxes. This is Joe. Joe graduated from high school in June and plans to go to college to become a marine biologist. He works at a coffee shop because his parents told him to stop badgering them for money. Joe has been working at the coffee shop for almost a year, so when April comes, Joe will have to file his income taxes. Whether you're a barista, a marine biologist, a doctor, lawyer, businessman or businesswoman, or an engineer, every April 15th, you will have to file income taxes. If you don't work, then you don't have to worry about this. But eventually you're gonna have to.
Why should the money you earn be taxed?
Everything you buy and sell is taxed even if you don't see it on the receipt. The revenue generated from the collection of income taxes goes toward paying for the general fund such as the military and defense, healthcare, education, job training, law enforcement, insurance programs, transportation, roads, bridges, and more.
So what is Guam's role in all of this?
The Internal Revenue Code, or the tax code, contains the official, legally binding tax rules set forth by Congress. This code is the source of all tax law in the U.S. and has the force of law in and of itself. This was the beginning of taxation in the United States, but not in Guam. It was not until the passage of the Organic Act of 1950 that income tax began on Guam. With the passage of the Organic Act, Guam became a United States territory. This meant that policies determined at the national level would apply to Guam. Like the tax system, Guam's tax system acts in accordance with the Federal Tax Commission, referred to as the mirror tax system. This means that although our income taxes do not go to the federal government, when there is a change in the Internal Revenue Code, Guam's tax system will change accordingly. A major difference in the collection of income taxes in Guam and the States is where the revenue goes. According to the Organic Act of Guam, Title 48 U.S.C. 1421, all customs, duties, and federal income taxes derived from Guam shall be covered into the Treasury of Guam and held in account for the government of Guam and shall be expended for the benefit and government of Guam. In Guam, these funds stay on island, whereas in the mainland, funds are subject to the federal budget. The revenue from income taxes stays on Guam, benefiting Guam directly, unlike the United States, where the revenue from income taxes goes to the federal government's fund. Guam has followed the mirror tax system despite the fact that some tax provisions in the IRC do not apply to Guam. If you compare Guam's economy and the United States' economy, they are very different. Guam is a small, service-based economy, whereas the United States is a large country with a highly industrialized economy. Guam continued to follow the mirror tax system because we did not have the authority to make any changes to the tax code because the federal government had not given us the authority to do so. This all changed 36 years later. In 1986, Ronald Reagan and Congress did something that has never ever been done before. In a partisan effort to simplify the income tax code, President Reagan, Congress, the Democrats and Republicans came together to pass the Tax Reform Act of 1986.
So how does this relate to Guam?
The TRA 86 gave Guam and all other U.S. territories the authority to delink from the mirror tax structure. According to the Tax Reform Act, nothing in the laws of the United States shall prevent Guam from enacting tax laws which shall apply instead of the mirror system with respect to income, from sources within or effectively connect with the conduct of a trade or business within any such possession or received or accrued by any resident of such possession.
In other words, U.S. territories like Guam or Puerto Rico could now change their tax structures, or they could continue to use its mirror tax system if they wanted to.
Following the passage, leaders on Guam began forming groups to analyze Guam's tax policy and to determine whether or not it would be more beneficial for Guam to even delink. The new tax commission would have the authority to modify to fit Guam's distinct needs and to address Guam's tax issues. Since 1986, Guam leaders have made several attempts to reforming and proposing changes to Guam's tax structure and/or policies, but 3 executive mandates and 3 legislative mandates later, Guam's leaders have still not come up with a firm decision on whether or not Guam should delink. From Bordalio in 1986 to ADA in 1987, 1990, 1994, and 2007. Now, in 2015, the legislature has passed Bill 60-33 into law, creating the Guam Tax Commission. The commission aims to analyze our tax policies and determine the best path we need to take, a choice that will determine our island's economic future. Senator Michael F. Q. St. Nicholas, the author of the Guam Tax Commission law in our current generation, was an assistant vice president and financial advisor with the Bank of Guam before becoming a senator. With his financial background as chairman of the Committee on Finance and Taxation, he created the new Guam Tax Commission with the vision to move forward delinking from the U.S. tax system and subsequently working on reform. Joining Senator St. Nicholas on the new commission are many professionals in Guam's community. The law includes Vice Speaker of the Guam Legislature, Senator of the Guam Legislature, a representative from the Guam Society of Certified Public Accountants, a representative from the Guam Bankers Association, a representative from the Guam Chamber of Commerce, a representative from the Guam Women's Chamber of Commerce. Going forward, Senator St. Nicholas, the professionals who make up the Guam Tax Commission, and the leaders the people elect will continue the work to build a tax system that works best for Guam. An island paradise that takes care of its people, thrives on tourism, protects its environment, preserves its culture, and attracts investment from all over the world.